Guess is a fashion company that's been producing really nice clothes for a long time. Their apparel has been around for decades, really has been a brand that's been relevant for a long time. They continue to be relevant, which is really impressive. They have a good assortment of fashion, apparel, accessories, watches, all kinds of products that benefit from the Guess brand. It's a global business and they're headquartered in Los Angeles, California. The company has been doing really well. Their last fiscal year was just a great year. The company was very profitable. They generated really high free cash flows to the point where they paid a supplemental dividend to dividend out the money they made. All that created a lot of buzz around this stock, and the stock really jumped up a couple of months ago. Since then, it's really come down. We're dealing with a market now that's selling off, prices are coming down, and this stock in particular is coming down fast. I wanted to see if it's a good buy or if it's priced too high. I'm going to value the company using my valuation methods. I'm also going to take a look at the fundamentals of the company and make a decision on Guess stock, whether I should buy shares or stay away. I like the company. I think the brand has a lot of value. I think it's very well operated, judging from the performance of last year and really looking at the performance over the last 5 years. The company is a solid, profitable company generating free cash flows. I'll take a close look and see if it's worth buying this stock. The Guess stock has been going up, but it's had a lot of volatility. Wanted to go through some of those volatile points that they've had. They had an earnings call where the stock really jumped up. It jumped up about 32% just on the announcement. And the reason for it is they were just far more profitable, generated far more cash than investors expected. But since then, the stock has come down. Since that high point to now, it's down 15%. So it's coming down to, I think, levels that a value investor is interested in potentially buying. It pays a good dividend. I don't know if they could afford to have supplemental dividends every year. I don't think they will. But currently, the dividend rate is really good. Overall, the stock over the last 5 years, it's been on an upward trajectory, especially coming off the COVID lows. You would have done really well if you would have bought the stock because you would have tripled your money. Looking at the fundamentals for Guess, the company market cap is 1.5 billion, revenue is 2.78 billion. So you're paying only a fraction of the sales for the company. Net income is really strong at 198 million. They've been buying back shares, which is good. It makes the stock price go up. And the forward PE is only 11.27, which is a very good forward PE considering that they're a growing business, profitable. So they should at least be given a 12 PE. There's multiple analysts covering the stock, and overall there's a buy rating, and they have a pretty good price target of $33, which would give upside to the stock if that price target is achieved. They have a dividend of 3.17, which is a good dividend on an apparel company. The analysts who cover this stock have price targets from $29 up to $37 per share. All these price targets are above the current stock price, which is interesting. And it really adds a little bit of assurance or confidence in this stock if all analysts are seeing that this stock could go up. I calculated the value of Guess using their free cash flows and what I expect the free cash flows will be in the future. I also looked at earnings per share and valued the company using earnings per share. And then I blended the two to get to a discount that I believe the stock is currently at of 45%. I think that the cash flows they're generating are just really positive. And I used the last 3-year average because the last year was so good. I didn't want it to really misrepresent the future for this company. Earnings per share is really solid, and I used a PE of 12. Overall, it's just a solid discounted stock. If they operate well, I think this is a very good company to put in a portfolio that can generate income and appreciate over time. So should I buy shares and Guess or stay away? I look at 3 things in a company before I make an investment. First, it's all about the company. Do I like the industry? Do I like the company itself? Do I understand their products? Is their management team doing a really good job operating the business? And I think they are. I think Guess is very well run. The profitability, the growth really shows. And it shows that their products are really well liked by consumers. That's why they're growing their top line. They're also growing into accessories and other products like watches. So like other premium brands, they could use that brand and diversify into new products. So that could enable Guess to grow in the future. The second area I look at is the balance sheet. Is it a good balance sheet or do they have too much debt? In the case of Guess, they may have a little too much debt. Their debt to EBITDA is 3.79, and I like to see the debt to EBITDA below 3. So that is kind of a deal breaker for me. They have a good amount of cash. They produce good free cash, but that debt is really worrisome, especially since they making so much money. They should be paying off the debt rather than providing a supplemental dividend. The company does have a really attractive discount, and that is pretty compelling. If the company can shore up their balance sheet, this is an investment that I would really be interested in. Overall, I'm going to pass on Guess. I just think that the balance sheet is worrying me. And at this time, I think consumer discretionary is a little risky. We're seeing stocks really fall here in April, and I'm going to stay away for the time being, but continue to analyze the company each quarter and see if there's a better entry point in the future. I appreciate you watching the video, and I hope you found it interesting. Guess is really an interesting company. It's been around for a long time, and it was really good to take a close look at the company to see if it was a good investment.